Welcome to TradeTheMBI.com. This is John. This report is for the 11th. Well, as expected, once we began the breakdown, unable to break above that ABM yellow, once we hit the 76%, we knew it wasn't going to hold given what we were seeing from the readings. There just wasn't enough support juice to hold it. It tried to support around the ABM green, but found it right down at the 61%. And it's modest given, what the news was, but the reality is, everyone says, well, how could they be so off on it? That they weren't off. They knew exactly what was going to happen. But the narrative is you have to sell to others to go the opposite direction so they can counter trade you and then clean up. That's our job, is to see when that kind of BS is being spilled so that you can be prepared for it. It was just to fly in the face of basic logic, and that works. You say the opposite enough, and people believe it, and okay, great. There's no inflation. Everything's peachy, keen, rosy, wonderful, and no issues. And we could see from what we're following that none of that was true. But that didn't mean that the market was accepting it, and they kept driving things. And then all of a sudden, they get a little bit of what they call a shock. But there was nothing shocking about the inflation numbers coming through. It was all consistent with what we've been seeing building over the last many months. From a reading standpoint, you can see that we're still seeing a bit more now of a short increase here, a little bit of a turnaround from midterm buyers there at the bottom. That could be enough to support right around that 50% on the NASDAQ at least. But it's still going to be problematic because there just isn't a whole lot of incentive now to jump in from alongside. And that begs the question, will you get a move towards a rate conversion? And we started to see that finally. So bond market waking up a little bit and saying, while the Fed could cut rates, really? Can they really do that? There's nothing you can control about inflation, and it's only getting worse. And it's not hard to follow. Again, all you have to do is look at what oil's doing and what that profound effect is on the broad economy. And again, it always comes back down to energy and how that implies cost increases. And then you can throw in the world events and everything else from there. And you get a significant narrative, particularly when you're talking about, their expectation is that Iran's going to do some kind of response to Israel in the next 48 hours. There's a lot of headwind there because you don't know what that could be. And, if that further constricts oil at this level, you could shoot over 100 a barrel for oil just in a matter of, minutes. It's not going to take much to do that other than the curb set in. And then you get this kind of foolishness, which always makes me laugh. It talked about how ridiculous the euro was with oil rising. And yeah, exactly. So it's all fun. You just have to be able to see where they're going with it. I'm shocked always, too, to read that people say, oh, gold is overpriced. It has gone too far. What are you talking about, gone too far? Oh, my goodness, that is hilarious. So you have zero control over where inflation is going and the constant debasement of your regular currencies. What do you mean you think that gold is going to be reserved? That's laughable. And it has been for quite some time. And this bleeds into the same course for cryptos and that, given their separate issues that they have. Needless to say, though, it's a move outside of regular fiat currencies. As a way to sort of park your resources until you're ready to use them. Of course, there are costs associated with that. Are they less than the physical trade in gold and that? Well, that was the whole point of ETFs, in that you don't actually have to have the thing to be able to trade it. Same with the futures on cryptos as well. It's an alternative, and you can see here from an ETH standpoint, Magenta is still rising, even though there's still an active short interest in there. You're going to get some variation plays because while there's a drain in real, support for that, you've still got to put your money somewhere. And we've now reached the point where the regular fund money coming in has been relatively allocated, and just don't see it moving into equities at this particular stage given that uncertainty. And you can see where we talked about the potential fill was going to happen after we had this primary uh, MBI white move. And then we were looking for a secondary move. It took a little bit longer for it to develop, but when it came, it did exactly that, filled back that move to 0%, and then accelerated itself going across. And profoundly still in a weak configuration here, and I would expect the lows to be retested again, simply because what's the buy incentive at this particular stage? If you're looking at broader escalation of inflation, there doesn't really seem to be any mitigation, no policy change that's going to affect that. So the momentum is going to carry itself a little bit further. That's basically the long and the short of it. You can see how shocking the reaction was here. You get the pre-dip when they realized, oh my goodness, our dreams of zero rates again are being held back, and it was pretty much a no trade after that. It was just flat, and everyone was just waiting to see if there was going to be any response. And here we are in the post market, it's that little lift, but I would expect it's going to fade a little bit, and we'll just keep bouncing around from there. But again, this was one of those where when you have that kind of a swift move lower, I think you need to see a pop back up simply because you have to take care of that option gamma stuff as we approach the end of the week. That's less important because it's pretty much been exhausted, and then you get a little bit more of a consolidation trade. So that's the long and the short of it. Anything relevant, I will certainly put on the Skype chat, but I think that's all pretty clean action so far. Have a good one. Trade well.